Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario on the 12-hour time frame, where we're looking at a finished 5-wave impulsive structure to the upside in a wave 1, aiming for 2, and then a continuation to the upside in a wave 3. The common target for a wave 2 is between the 0.5 and the 786 Fibonacci, taken from the low to the high of wave 1, giving you a target between 64.3k and 59.8k. The 382 has been touched, however the 382 is an uncommon target for a wave 2. It is a target nonetheless, though at 66k, but it just has lower probabilities, and the 886 is a very rare target for a wave 2, you don't want to hit it. The invalidation is the low at 56.5k. You also see a vertical line on the chart that is a fib time taken from the start of one to the end of one to compare wave 1 with wave 2 in time. It is most common for a wave 2 to end after the 0.382 fib time sitting on the 22nd of June. Therefore, we have to keep in mind that we could have a potential bigger 3-wave corrective structure, after which we then expect continuation to the upside. A scenario that can extend the corrective structure in time is a WXY to then finish wave 2 and look for continuation up in a wave 3. Here we have a finished wave W in a zigzag, a wave A, B and a wave C. We're then having wave X and looking for wave Y to the downside, where the probabilities are high to then take this low over here. The common target for X is between the 618 and the 886, is 69.7k, is 71.3k, taken from the high to the low of wave W. Again, the vertical line on the chart, a fib time taken from the start to the end of W to compare W with wave X. Wave X at times can be short, and a wave X most commonly is a zigzag, and there is definitely a potential for a 3-wave zigzag here, so wave X could be finished. However, it is most common for wave X to finish after the 0.382, which was the 13th of June, so therefore we at least have to consider the opportunity for wave X to not yet be finished and still see a move to the upside, where we do have some additional resistance. First of all, the daily here at 68.2k, but then the blue box 70.8k to 71k, before we then actually have that wave Y to the downside. If we look at a scenario where this wave X can extend in time, then a flat is a possibility here, where we have a 3-wave move to the upside in a wave A, look for a 3-wave B and then a 5-wave C to move above the high of wave A at 70k. The most common flat target is the 1.236 to the 1.38 taken from the low to the high of A, giving you a target between 65k and 64.4k. However, we hit the minimum target for a flat, which is the 09 to 105 area, 66.4k to 65.8k. So there is already the potential to start a wave C, and in that case we then want to see impulsive structures on the lower time frame, as we're then looking for a 5-wave move to get above wave A. If wave X is already finished, then this move to the downside could be counted as an impulse for a potential A, B and a wave C, where we can potentially expect then a bounce to the upside, but then label it as a wave B and not move all the way up to 70k before then a C to the downside for this wave Y. Locally, we also hit the 886 taken from the low to the high. Any move to the upside now has a higher probability of being a wave C or a wave Y, as the 886 is a very rare target for a wave 2, common for a wave B or a wave X, and therefore it increases the probabilities to sooner or later move down to take the low here at 66k. It is quite common for price to move to the golden pocket after an 886 touch, so that's why I have it on the chart, 67.3 to 67.6k. The bearish scenario on the 12-hour time frame is a bigger 3-wave corrective structure in a WXY, after which we look for continuation to the upside. Common target for your wave Y is between the 0.618 and the 1.236 trend-based fib extension taken from the start to the end of W to the end of wave X, giving you a target between 63.2k and 54.3k. What lowers the probabilities of this scenario, however, is wave X, as inside wave X we then have an expanding flat A, B, C, but your wave C is very long in time, over twice the length of A plus B. That is what the fib time on the chart here represents, taken from the start of A to the end of B, and you can see the high of wave C is made after the 2, meaning C is twice the length or longer than twice the length of A plus B, lowering the probabilities this move to the upside is a wave C. Nonetheless, if we then do look for a wave Y to the downside, a wave Y can be a zigzag, that's most common, a flat structure, second most common, or a triangle, which is the rarest structure in a wave Y. For a zigzag, we needed to see a 5-3-5 wave structure, meaning a 1, 2, 3, 4, 5. However, wave 4 went too high, invalidating an impulse to the downside here, which lowers the probabilities for a zigzag in a wave Y. Therefore, we have to think about either a flat or a triangle, but as a triangle is also rare plus. If this is your wave A and you look for a B, C, D, E now, your wave A did not even touch the common target area for a wave Y. So a flat would have the highest probabilities, where you then wick the highs, you take the highs here at 72 to 74k, and then move towards the downside impulsively for a wave C. If we zoom in to that particular scenario, so looking at the flat, then we have a finished 3-wave A here on the lower time frame, and we have to look for a wave B. The common target area for B is the 1.236 to the 1.38, taken from the start to the end of wave A, giving you a target between 73.3k and 74.2k, after which we then look for a wave C to the downside to take the low of wave A. At the moment though, before price is taking this high, the low of wave A is an invalidation, as most commonly a wave B is a zigzag, a family structure in either a 5-3-5 zigzag to the upside. However, this move on the lower time frames counts very much as a 3-wave structure in an ABC, which means that a potential double zigzag in a WXY is a opportunity. However, preferably wave X then does not touch the 0.7 Fibonacci taken from the low to the high of your W, which it did. So it does lower the probabilities for a WXY to the upside inside wave B, and therefore it lowers the probabilities for a flat here compared to the WXY. If price moves to the upside and touches the 1.618 at 75.6k, then it reduces the probabilities for a flat, increasing probabilities for continuation to the upside. On the 15-minute time frame, we do have some local CVD divergences. We have a bullish CVD divergence here, but keep in mind that price did touch the 886 as well. So the 886 probabilities go against the bullish CVD probabilities here. More locally, we had bullish CVD divergences that already played out as price took this high, and then at the moment here we have some bearish CVD divergences and also a little bit of bullish CVD divergences, but if price takes this low, the bullish CVDs are invalidated. We do have some news today, the final day of the week here, Friday, June 14th, or at least the news week I should say, then 4 p.m. Central European time. Make sure you trade safe around that hour. And if we then look at the probabilities of the different scenarios, then on the 12-hour time frame, the probabilities are higher for the bullish scenario, which is the impulse, compared to the bearish WXY. On the 4-hour time frame, a WXY has a higher probability compared to a flat structure. Also, the 886 here locally is hit, increasing probabilities to sooner or later take out the low. And on the 1-hour time frame, there is at least the potential for a little bit of a bounce, because after an 886 touch, price does have a tendency to move to that golden pocket just above, and we have the possibility for a flat in a wave A, B, and a wave C. Do remind yourself that the common target area for B is actually below the low, but we do have the potential for a wave C to the upside in that wave X for a WXY, with inside wave X a flat ABC. And if we are looking for a wave Y, WXY, where X is already finished, there's the possibility for a zigzag to the downside, where a bit of a bounce could be then a wave B for a C to the downside. So there's at least the potential for a bounce. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.